What up, Bardo? Good morning. Good morning, Natalie. Just looking at the markets. Yeah, the data, man, didn't really give us an edge. So far, how y'all trading weeks are going? Yeah, like this data didn't give us an edge, man. Really sucked. Sec. Yeah, exchange. Yeah, hopefully at 10 we could get something, right? Like that's most likely going to be the actual goal. But you could just tell just looking at these numbers. Yeah, ADP employment did come in lower and it was revised lower too, which is actually a good sign. And Challenger layoffs actually came, yeah, it actually was a bad print, but initial jobless claims a little higher than expected. But the problem is continuous jobless claims was actually better. So that was more of a mixed print. But overall, like looking at this, we are still seeing easing, so I definitely like that as a dovish outlook for the moment. It's still showing that we should have an easing Fed.
Recording in
But
progress.
the problem is, was it enough for the markets to start pricing in it now, right? Because we still got the data that's going on at 10. I still like the idea of looking at a weaker dollar, right? So it's to me, it's probably just going to take time, but still understanding that tomorrow is NFP and it's a possibility that the markets it may wait until the data settle, right? Like wait until after the data and probably during a time where you're least going to be expecting a reaction is when we actually get the move. You know what I'm saying? Like we're anticipating right now that the data is going to give us a breakout, right? But it's probably going to happen like Asian session or maybe we get it happening at 10. But even though that the data supports a cut, so still is showing the easing of the labor markets. I wouldn't be looking for literally, I wouldn't be looking for anything else. Like the data is not supporting the fact of the Fed should pause rates. All right. So I still like the idea of a weaker dollar for today. It'll be pretty good if we could get that today. But looking at the yields, right, the U.S. 10 yield is going to be very important to see how that reacts and just let the markets consolidate, right? Like hopefully we get some consolidation and then we get a break of structure. All right. Anybody took the gold sells last night from the market update? That the sells played out perfectly, like crazy, like crazy. It was obviously a pullback. I'm pretty sure some of you took the buys too, waiting for that retracement. pretty much like that was a good opportunity also for those technical buys on gold. Let's see what we get. Just mark up analysis because and then we'll talk about the data coming up. Yeah, good job. You caught it though, Vardo? Nah. Yeah, it's all right. Markets ain't going nowhere. Yeah, so I'm just putting out the ranges so you guys could see market structure, right? So you could just get a good idea, understanding what to expect. Oh, you never had alerts set? Yeah, it's important, man. I think that's the best bet is just setting alerts. You know, I know that's like a life changer for a lot of people. So if ISM today comes out higher than expected, then I would anticipate a stronger dollar, most likely probably we'll see a stronger dollar for today if we get a very stronger print in ISM in the next hour, right? So with that stronger dollar, what it's going to do is going to push GU lower. We're going to see it break below that support of 34,200, and Euro USD might be a really good sell-off with that stronger dollar coming in place, okay? So if we do get stronger ISM, I think that would, for equities, remember what I always say, it's going to be tricky, right? Because we're going to get either a dovish reaction or we're going to see equities go bullish from supporting stronger growth. But for this scenario, because we're so close to Friday, we're so close to NFP and it's already September, if this does come out higher, right, we can see a possibility of a hawkish reaction where we see stronger currency and we're going to see the equity markets do push lower, right? It's a possibility. I think it's going to hit a support and then reverse, okay? So a higher print to me would be the best bet for a stronger dollar because that's going to be a surprise, all right? That would be a surprise play. Stronger dollar might push gold lower as well, breaking that support. Now, if we get a weaker print, it's most likely, it's already expected, obviously. You know, the markets is already expecting weaker growth. So might not, right, see a massive reaction unless it's just a surprise miss. Then we could take advantage of that weaker dollar. All right. Like meaning if we get like a recessionary drop, like in ISM PMI, then most likely all the data that we've been having this week is clearly supporting, downside in the economy. And that will most likely just continue to trigger those cuts. So I like the idea of that as well. I think it's going to be double-sided today. Yeah, I got you guys. Hold on, mute. Got you. Yeah, so I think it's going to be double-sided today. So just remember, if we get a higher print, it might set up for a really good opportunity. You could take advantage of those buys, right, for the dollar. Equities, again, is going to be tricky because we have to look at price action to really see if we're going to get a hawkish or a dovish reaction, or we're going to see that the markets is just going to follow data, right? Because strong growth is still good for the stock market. So we just don't want to overlook that part. Okay. So just remember that. But I still like the idea if we get a miss, expect those arrows to follow for equities to start breaking above resistance. And we will see like a stronger dollar. We're probably, if we get a stronger print, we expect stronger dollar, equities to push lower. If we get a weaker print, right, we'll expect dollar to push lower, equities to push higher. So you just said when it comes to equities, look at price action. Don't just enter the trade just because we see the data. We have to be sure. Because even right now, looking at data so far, to me, it does support the expectations of a cut still. But as we're looking at the dollar right now, it's not giving us that bias, which is good because this is not going to change expectations, but I still think it's going to set up for better sells later on. So just let the dollar continue to rise. And then if we could get a better opportunity afterwards, I think that would be a better play. Okay. Like probably maybe Asian session, maybe London session, right? Hopefully we get it at 10. We just get a clear edge at 10 and we could just see the markets actually follow the direction we want. I'm hoping for that. but let's see what happens. All right. Like if you guys have questions, now is a good time. So just wanted to get that early so you guys can understand like the data, like it was expected. So it's not going to give us it's melt like dollar's not going to just melt right now just because, right? Because it was already expected. So if we get ISM to actually come in lower, then most likely that would be a trigger for a weaker dollar. It should be a trigger, right? Expect it or not, that should definitely still be a trigger. But sometimes the markets might give us the reactions later on. It probably won't give us the direction we want now for the dollar. We'll probably see it push higher, at least to like 98.600, maybe hitting like around 98.7 or point 0.8, and then we'll start seeing some downside. It's a possibility, right? But I just want us to be on our toes. Philip, so far, yeah, I summarize it. So if you guys just missed it, today we just had job data from ADP employment, and we had also what's the other print? Lost my train of thought. And Challenger layoffs. So they did come in weaker than expected, but wasn't a surprise. It still came in lower. And then we had jobless claims, initial jobless claims, and continuous jobless claims came in mixed today. Initial is more of the focus, but you still want the overall, right? You still want all the data to be one-sided. But jobless claims came in mixed, right? And so the markets could either be waiting for ISM data to come out and have that, and that's probably they're just waiting for that data to come out before we actually see the true move. It's a possibility of that, right? But if the data is lower, but it's not a surprise, it's a reason why we're just not seeing the direction of the markets following a dovish outlook, because it's just not a surprise. Okay. So I'd say the best course of action right now is going to wait until after like 9:30. Obviously it's going to be NYSE open. We could see volume at that time. You know, we could obviously see volume at that time. But I like the idea of waiting until after 10, let the data pass, and then look for opportunities afterwards, just so you could be on the safer side, okay? Because you just don't want to be trading in mixed markets. So as of now, you could focus on market structure, right? If we see price action is breaking, like an example, if gold is just pushing lower and we see gold break below 35, it's just going to be a higher chance that gold is most likely going to push lower, all right? So you just want to follow price action now until we're forced not to, okay? So hopefully that helps, Philip. Is there always initial spikes during news events? Yes, it's always initial spikes because of the algorithms, right? So we're going to see algorithmic spikes happen all the time, right? So in our situation, we have to understand if we have an edge or not. You know, so the spike could be like you'll get the spike in the direction of the data, but sometimes it's just not enough for the continuations, right? So that's why the break of price action, right? When we see a break of structure, that gives you that extra confidence that the move is going to continue. So that's why like you just want to be able to outline your areas of support and resistance. And when the price action break those zones, and then you see if the markets as a whole is reacting to the data, that's when you are able to take advantage of it. Okay. So it's just not just the initial data and then just going like, then just wanting to take a trade because of it. Like you could try that, but it depends on the type of print that it is. You know, like you could try it. Like it's not to knock it. Just give yourself enough space for the move to happen, and then it depends on the print, right? Because if like just an example, like if you would have did that for ADP employment, right? And then you would have had your sell stop here, you probably would have got triggered and then caught with a huge reverse. You get what I mean? So it's like, you don't want that. Like you want to make sure that like dollar is breaking structure, yields is pushing lower, and then you want to make sure that the equity markets is higher. Then you could trust the reaction. Like it would help if it's like probably like Friday is a good, it depends on the print still, you know, because even tomorrow, if you do that, it would depend on the print. You know, it depends on how like big the data is. Because yeah, like this could still happen, you know, like ideally like this could still happen even if, yeah, it is risky. Yeah, Leo, like this could actually happen still, even if the data is on our side. Right. So just because, you know, like just because right now we're not seeing a weaker dollar, it doesn't mean that it won't happen in the next 3-4 hours. You get what I'm saying? Because like we're so in tune to right now. That's why we just get ahead of ourselves. It just doesn't mean that dollar won't drop in the next 2-3 hours. You know, so I would still stick with the bias unless I get extremely proven otherwise. You know, like right now, like UJ, I don't like that. You know, so this is showing me that obviously price action is showing a stronger dollar. But how come the yields is not pushing up? You get what I'm saying? So it's kind of giving me the vibe of like, let me just be patient. Let me not like force a trade. Yeah, like both sell stop and buy stop get hit. Yeah. And then there's days where it's perfect. You know what I'm saying? So it's like it is a hit or miss. Like there will be a day that like somebody would do that and it's just like perfect. And then there's days where it's like, yeah, your sell stop and your buy stop would get hit. That's why it's just best to look at the markets as a whole, you know, it's just so you can have a little more confidence. Like right now, it's like we see equities pushing lower, dollars higher. It's looking more like a hawkish reaction, but nothing is confirming it. So just because I see a hawkish reaction, it doesn't mean that I want to take that trade, you know, like, but dollar could rise aggressively, but it still doesn't mean that I want to take that trade, right? I want to take an opportunity that makes sense to me, you know, that makes sense to the markets where I don't have to play that guessing game. But if you want to take technicals, it's totally fine if you want to, but identify it. You know what I'm saying? Like, oh, this is a trade that I want to take this. I know it's against the bigger picture, but I want to take this trade because price action is showing X, Y, Z, and then take that. But don't let those trades like mess you up on the bigger picture of how you're trying to look at the markets, right? Because somebody would take buys on the dollar right now because it's a technical break. Then they're like, okay, like gold, for instance, right? Oh, I want to take sells on gold. Then it doesn't happen. Then they're like, fuck, man, I don't know what I'm doing. It's like you chose to take a technical trade. It's 50-50. So just be okay with those odds. But if we understand that we want a weaker dollar, we want weaker yields, then you should be still fundamentally, you can understand like, okay, I would like to take that buy, you know? You could understand why it's a buy. But if you chose to go against that and just focus on technicals, don't let it discourage you. Make sense? Yeah, it does. Yeah. Like that's why I say like have like when you less confident, you don't have to not trade. Like you could just lower your lot size. You know, if you're less confident. I don't think there's like nothing wrong with that. What's up, Andre? Yeah, this is crazy. Like, listen to this, guys. Like, God is good. It says, yes, Hakeem, bro. Like, I just asked the person if they're good. I'm just finding God now. I was in your Zoom call the other day. You said you believed in God. I used to think we was all our own gods. Yes, that was me thinking I was my own God. But now I always knew that there was a higher up. Like, that's amazing, dude. One sec, guys. Damn, dog acting crazy. Here, same way. Yeah, it's crazy. I used to think the same way too, man. I used to think the same way. Going to chug water. In the future, do you ever plan to switch to a few? I mean, it depends. I like the I like I just like trading like GJ and other pairs like GBP AUD. Like if I'm solely focused on equities, dollar and gold, I don't mind, like, but it's like because like I like to help because there's other people that still focus on forex in general, the markets as a whole. If I just go to futures, then it's really no point to focus on other central banks. Like it'll be just no point. Yeah, I like GJ. I like trading AUD JPY. Yeah, like it's just, and plus it's a comfort thing, and plus others. I don't really feel that it's a point. Yeah, I don't feel like it's a point for me personally because then it just has me only focus on the Feds, which is not a problem neither. But it's just like if I'm just will be looking at dollar only, gold and Nasdaq. I'll just be focused on three pairs only. Then it would just be no point to like really pay attention to the entire markets. Like that's just the only reason why. Like just to tell you the truth, the only reason why I like forex is because of the diversity of pairs that I could trade. Like if the dollar is dealing with some shit, I could focus on the pound, right? I could focus on Australia, Swiss franc if there's an opportunity. Yeah, that's why like I like it. Like UJ is really good, but then I'll just be limited to only trading with economic data in New York session only. It's just but yeah, like the price points are different. I know that the price points are different, the moves are different. I know I heard it's a lot more smoother. So it's like, yeah, it's whatever like best fits you, fits like whatever you enjoy the most. If you're trading gold only, then you might as well do futures. If you're only trading Nasdaq, you might as well do futures, right? So, but if you're trading currencies, I recommend, yeah, like you should stick with the forex market, the forex brokers, if you just want to trade forex in general. Because like I trade the yen currency, but it's just USD JPY, it's just inverse. Like if you trade the pound currency, it's just pound dollar, just inverse. Well, pound dollar the same direction, but like the USD pairs is just inverse because it's only traded against the dollar. So that's the problem. If they add like GJ like cross pairs, then I'll definitely go to it if they ever do that, but I doubt it. Yeah, so just stick with, yeah, definitely stick with it if it was working for you. Yeah, because there's a difference that you have identified that works. Yeah, you could just see like gold pushing higher. Like I want to see the weaker dollar. Uh, I like. I don't think there's. I don't know if there's MT4 for futures. I don't think so. You got to use whatever platform they have. Yeah, like at this, yeah, I think they all use the same platform. They all have the same like coding and all of them. They just have like different logos. As employment came out weaker, why did the dollar gain strength mostly immediately? Because I mean, just because it didn't drop, like dollar is just it's still in a range, you know, and we have ISM data at 10. So usually sometimes the markets wait until all the data pass, you know, because there's no reason for the markets to like right now, even though that ADP employment was lower, there's no reason for like the dollar to just melt and drop 300 pips, knowing that we have ISM coming up and then we also have NFP tomorrow. So sometimes you just have to wait till the data pass. Like if ADP was like a massive drop, like 38 was the low, 38,000. It came out at a 54. So it is low, but it's not recessionary low, right? So that's one of the reasons why, as it is expected. So we have to understand that. I try to keep that in the video so much for you guys to understand that the data is expected, right? So if it's coming out as expected, it's not a surprise. What will be a surprise if the data came out higher, right? Or if we had a massive drop where signals a recessionary type of approach, then we would have saw big moves. But right now we have data at 10. So that's the reason why. Most likely, I still like the idea of a weaker dollar, Johnson. It's just that it might not happen at the moment. It probably just going to take time. But now we just have to wait to see if inflation ISM data comes out lower. That just gives us extra confidence for a weaker dollar. So it's just a waiting game at this point. And if you guys don't know, I think I did 2 videos so far on YouTube. If y'all don't mind, just go like it and put a comment for me for the algorithms. And if y'all like videos like that, I'll do it more. And then I'll do like I'll add charts to it too. So instead of just like a talking head, I also like do a part 2 where we just go over the charts as well. So I could give you guys, I just thanks Tiara. I wish I had that. I wish I had that. Would have made life a lot easier. Yeah, Jesse. Yeah, I wish I had that growing up, like growing in the industry. I wish I had that. It would have made life a lot easier. Yeah, it's like nothing else that's really doing. I tried to find like other because like the people that do talk about it, they're like old white people. You know what I'm saying? So and the language that they speak is kind of complicated, you know, for people that are new. It's very hard to like break it down. You get what I'm saying? Yeah, like because I had to. It's like learning. Like it's a definitely a learning curve listening to these people. You know, because they like speaking to professionals. So when you're there, it's like, man. I mean, Sonny, they all. I mean, if like first you have to figure out what he's selling, right? Because most likely he has something that he want to get y'all away from that to get y'all to go to his thing. So first you have to figure out if they have an agenda. Like they all in the same bubble, you know what I'm saying? So it's like, and I'm pretty sure he never had issues neither. And if you're just like, and it's clickbait worthy, you know. So if they're talking about like, oh, like what gets your attention is when they're bashing something or bashing somebody. So people use that as their, yeah, like so they just have an agenda, and it's click worthy when you do that, you know. So that's the reason why you have that debate. The problem is not with somebody else. The problem is, a good job if you guys took the buys on gold, breaking above structure. But the problem isn't about what somebody, like, did you have problems? You know, do you have problems, right? Did you ever deal with an issue, right? So, yeah. Yeah, and it's definitely a tax thing. It is. But you get the statements. So that's what's important too. You get statements. But it is also a tax thing. Yeah. But what's the point if the majority of people is not profitable, right? So it's like, what's the point? but the agenda is to get you to join something that they're trying to promote, and usually that always come to light. But the issue is, if you're dealing with problems, then you go off of your own understanding at that point, because usually everybody has an agenda. It's never just like a video just to actually help you. It's always a something to get you to push you somewhere else. Just to make it clear, Sonny. Yeah, and there's people here that trade forex. I mean, futures. There's nothing wrong with it. I don't think there's nothing wrong with it. But just go by your own understanding. You know, like, just because they're successful at it and then you switch because you're following somebody and then you are worse. So you have to figure it out for yourself. And that's the problem. Like, I dealt with that in the beginning. We all dealt with that. You're too invested on like looking at other people instead of like, okay, like, let me look at like, what am I doing? Like, what am I doing? You know? Because like I said, if you're still the same person, it doesn't matter if you go to futures. If you're still impatient, you're still over trading, all the problems are still the same. It's not a broker, like, because the broker and the trading view, the candles are exact same. Yeah, like they move the exact same. So it's like, it's not a broker that does it. Like, it's just people's personality. What in trading, it's like, you can't like go by everybody's perspective, right? Because people are investing everything that they have into these markets, and then when they lose, they want to blame somebody. So they're gonna blame the broker, they're gonna blame the person, they're gonna blame that mentor, they're gonna blame that person on YouTube. That's why you can't really listen to everybody else, because nobody's gonna say, well, I fucked up. You know, they're gonna easily, it's easier to say that, oh, the broker fucked me over. Like, that's what majority of people say. So that's why you have to go by what your personal preference. You know, go by your idea first. It's like somebody is telling you to taste food. They're like, no, that shit tastes nasty. And you never taste it. But it's like, you know what? That person said it's nasty. I'll never try it. It's nothing new but it's nothing new. It's just futures is just, you're just trading equities, gold, and only the dollar. It's like really nothing new. Yeah, it's nothing new. Yeah, it's nothing new. It's just like, you're just trading, like, the price points are different. That's all. And some people say the executions are better. Like, you could switch to it and just give it. There's nothing wrong with giving it a shot, but yeah, like, you just have to, like, there's times where you did. Yeah, it really is. It's just it's a mind thing. Yeah, there's no swing trading, right? Yeah. Yeah, like, you could trade the pound. It's just that it's just pound dollar. Like, that's really it. Yeah, so like, it's nothing wrong with it. You could try it, but it's not like futures. It's like, oh, you have to do something totally different. It's just a different broker. Like, it's just a different platform, a different feed. Like, what is different is the contract. Instead of lot size, is contracts, right? Like, they just made it affordable for retail traders to do it. It's the same thing what they did with the stock market, where like, in order to make some really good profit, you had to have over like 10 grand, right, to buy shares. But now there's fraction shares so that everybody could trade. So you could not, they just made futures available for everybody, where it's like those contract size, like one contract is not like $30,000. You know, so now you could trade futures with $1,000 account. So that's really all that they did, is just made it more accessible. But it's not like it's a different thing or a different strategy or something like that. But yeah, I mean, like, like, I'm not doing anything like unique or different. Like, I just wait for opportunities. Like, there's no secret sauce or secret anything. Your risk management has to be like the amount that you lose has to be lower than what you make, right? It's just a risk to reward game. That's all that it is. You know, don't overtrade, like wait for opportunities, right? And just stay consistent, like where you're just looking for the same setups every single day. If there's something that's happening that I don't like, I just don't take it. That's just all it's that's really all that it is. And I just repeat the process longer so that I'm more successful trading that way than I was losing. Most of us just don't do the right thing long enough. So we're just used to fucking up for so long that you would have a good day, you would have a good 2 days, but then you just go back to your old habits. Or you will look at somebody else post something in the group chat, then you will follow that and then mess up, right? It's just, that's all that is. It's just trying to stay consistent. Yeah, like news and nothing, it, like when it comes to futures, it has nothing that has to do with data, move nothing. It's just the charts are different. It's only based off the dollar. You're trading equities and gold, and it's contract size. So instead of lot size, it's contracts. That's just really the difference. It's just, yeah, it's not like you're just going to a completely different world. It's just like a different brand of trade, different way of trading. Yeah, because when I first started it, I thought it was, yeah, like I thought it was like another world too. I was like, I would never understand it, but just give it like a week and then it would start making sense. Yeah, the link is in the bio, brother. Yeah. No, because right now, I mean, Nas could push higher, right? Because like I said, the weaker dollar makes sense, but we have data at 10. So we see Dow Jones is pushing lower. So like what I say is like identify first when to not take a trade. You know, like that's the goal, is to not take a trade, and don't force yourself, because the number one problem is that you're trying to force yourself to be successful at this. Like, so it's like you're dictating your success in this market by based off of how much money you can make, not by your knowledge, not by your education. So you're not trying to be wise in the craft, you're just trying to just make money, right? So it's like you're a locksmith. So you could do you're like you could be the best locksmith in all of New Jersey, but if you're not being good at marketing, if you're not actually going out there like trying to show people what you're doing, you will never make money doing it. You know, but in this space is different. You have to educate yourself first. You have to understand risk management first, because like at the end of the day, it's like if you get a million, you could, it's not a money amount, you get $1 million account, like you, like money won't change you. You know what I'm saying? It's the wisdom behind it. Looking for setups that makes the most sense for you, and you have to have an actual change. And like you do show a lot of good opportunities, a lot of good trades. It's just that you just have to have confidence in yourself. That's all that it is. And just use proper risk management. So when you do take a loss, don't let it affect you. Plug me in. I'm glad you enjoy it. It's more for the live group, you know. So I just like I'm here to help too, but everything is in a Discord group. And just be patient with yourself, man. Like that's all. It takes some people longer than others. It's fine. Like if you're having a struggle, it's just have patience, man. Just be patient with yourself. Just write it down, like the things that you're struggling with. Like, oh, I struggle with confidence. I struggle with this. Like, just write that down so you could actually go into detail with what you need to get better with and what you are struggling with. Yeah, like yeah, because you did say is Nas is a buy, right? So it depends on where you're gonna buy it. And then also you said that that the VIX dropped, so that helps S&P 500 push higher, right? So then Nasdaq typically follows the S&P. So US 30 does its own thing sometimes, but now look at US 30 just retesting a support. Usually when it comes to equities, it's best to, instead of like buying from the high, it's better to get in from a low. You know what I'm saying? Because if you're trying to buy at the high, this is the consequence. You'll probably try to buy at the high, then it will recover. You have a better idea like looking at areas of interest where you can see reversals from. That's how I like to approach equities. You know, like if the data does come out lower and it supports a rate cut, then we could possibly see NASDAQ, but it's already expected. You know what I'm saying? Like the buys in equities, it's nothing new. But look at gold, right? Gold held structure. This is clear price action. We broke above structure, candle closure. But the problem is, would these wicks be taking you out, or would your stops be below structure? So that's the difference. But the price action is always the same. You know, so it's just that gold just took off, right? Because we're expecting weaker yields, weaker dollar. Everybody's been buying gold, right? So gold buy, dollar is still not pushing higher, right? Gold doing the opposite. So it's just the price action is the same. You know, like the price action never changes. It's just being prepared and prepped for those opportunities. Would jobless claim data give a hint of bias when combined with PMI? Yeah, I like initial jobless claims coming in lower. I think the markets is like everything still supports a weaker, like a dovish reaction, like weaker dollar, gold is pushing up, right? I want to see the yields spike a little lower. Equities did spike higher, so this is definitely a dovish reaction. It's just like I most likely think the markets is going to wait till 10, and then we're probably going to see the clear direction for the day. I think that's what's going to happen. But still, right? If dollar pushes up, it's not going to change expectations. Tomorrow's data will change expectations. Not today's data. It's most likely tomorrow. But if today ISM data does come in low, it has to be below a 50. Then most likely we'll see that dovish reaction. It's a possibility markets is waiting for 10. Like I said, like gold just moves very quickly, right? But if I go to the higher time frames, it's really nothing. But gold gives you better risk to reward, right? But when it comes to currencies, it's no reason for the dollar right now to just completely melt just because of weaker ADP or weaker jobless claims right now. But it would make sense if ISM data comes in lower than expected. Then we could see that drop. If we don't, then most likely the markets is either waiting till later today or is waiting for NFP. All right. I just wish that I wish dollar just melts. It makes our life a lot easier. But this year it just hasn't been that easy. It just hasn't been that like simple. You know, as we all could tell, it just really hasn't been that simple this year. It's like you got to use your brain a bit when trading data this year. It's just like, fuck. And a lot of the moves that you want to catch, like I always say it already happened. You know, like now is like where everybody is looking for swing trades, and you're looking for swing trades now when the moves happened 3 months ago. Like you get what I'm saying? So it's like we're so delayed when it comes to understanding direction. Like we're like as humans, we're always late to the, and all the banks and institutions know this, right? We're always late to the party. Like now people want to buy NASDAQ and hold swing trades. It's like this happened in April. You know, this was already expected. You get what I mean? Now it's kind of a little too late. Like now you want to swing trade the weakness of the dollar. This has been happening since April, right? So it's like now you want to kind of try to catch long-term sells. It's like they already been expecting the Feds to cut rates this year. So it's nothing new. We're just late to the party. Like just look at it like after this call, like just look at from when Trump came into office, right? Remember when he was going against Kamala Harris and what happened with the markets? They was expecting him to like, oh, America was going to make so much money, all of this stuff. Equities pushed higher, dollar pushed higher. Oh, he was going to be more inflationary. Dollar was going to rise, equities rose. And then look what happened when he actually got in office and announced tariffs. Then look what happened with gold, equities, dollar, right? And then look at April when they felt that tariffs was no longer going to be that much of a threat. Then look at April and then look what equities did after that, right? Then look at what the dollar did after that. Then look at what gold did after that. Look at gold when geopolitical tensions was actually escalating with Russia, Ukraine. What happened with gold after that, right? Those were all the times where they're getting in for swing trades. It's like now gold is at all-time highs. Now you're looking to swing trade those gold buys. This is where they take profit. When everybody start thinking that, that's when they start taking profit. That's when you see reversals, right? So we're very late to the party. So you just have to learn how to get ahead. And the way you get ahead is like trying to be an analyst. Like understand how analysts think. Oh, okay, how do I learn how to be an analyst? Watch Bloomberg, read financial reports, like go to these websites, Wall Street Journal, Reuters, like read it, like read this stuff, then you can really get an understanding, right? Listen to interviews when these CEOs of institutions are talking. Listen to what they say. They never bring up a chart, but they all understand the economy, right? So that's what would help you. But yeah, I understand it's boring as shit. But that's what helps. But all right, guys, we got at 10. So again, appreciate you guys for being in the live. Gonna stay with the private group. If you guys are interested, just go to the link in my bio. All right, guys, if y'all want to sign up. And I'll probably do a prep earlier tomorrow for NFP so you guys could catch on.